Stocks closing out a rare three-day win streak. The Dow jumping more than 300 points, the S&P jumping 1.5%, and the tech-heavy Nasdaq leading the charge, climbing more than 2%. Two names in particular catching our traders' attention. Netflix rising 3%, inching toward the $300 mark, a level the stock has not seen since that awful Q1 earnings report. Shares of Snap jumping more than 15%. That stock hasn't quite recouped its losses after last week's report, but it's getting close. Dan hopes.
Well, it's funny. We were talking about this on our call a little bit. Yeah, so I was long into this print. It was down 30% on Friday. Wasn't great. I bought it aggressively. That was my final trade on Thursday afternoon. I got my average down to $8 here. So we have this move up to 9.5. It's down in sympathy here with the Google. But to me, I mean, that's how you have to trade a name like this. And, you know, as maybe some sort of analog, if you look at the way Netflix had some massive gaps over the course of this past year, there's a lot of things going on, macro headwinds, some own goals by them, that sort of thing. Seems like they're coming out of it. Guy had a great call that Netflix would fill in that gap, that last big gap to $300. Well, I think that Snap, it's kind of like who's left to sell here, I guess is the point. We know that they have a restructuring. So to me, that's the kind of play. I did take some profits on some of that stock that I bought at $7.50 at $9.50 today. That's how you got a trade around a core position. But to me, I actually expect it's going to fill in that gap that we just had to about $10.50. So
I have a question because we use the word trade a lot.
Yeah.
So when you say for a trade, how do you think of that? Is that time? Is that percent gain? Is that
for me in this situation that I am long and I have a long-term time horizon on a portion of this position, but because we had such a massive move, I bought more and I had an outsized position. So to me, because I had such a massive percentage gain in a short period of time, that's why I traded a portion of it.
Yeah, nice trade, Dan. I mean, I will say, like, those two aside, this really felt like a rates day, not an earnings day. And that is like extremely odd, being that we're in the middle of earnings season. And our whole argument for like why we should continue to move up and to the right is that, okay, yes, expectations have been lower, but stocks really aren't performing and earnings aren't nearly as bad as really what we thought. And the apocalypse is not coming, et cetera. But you see the rate move, you see the dollar move down, you see Fed fund futures all up. Like none of this to me. And then going back to the two names that you just said, Snap leads the market higher. How about home builders? ITB, XHB. Did you not see the report out of like home ownership, home prices, home mortgage applications? I mean, there is nothing fundamentally strong about this market aside from the fact that you saw a reversal in rates. And I honestly think that's why you see names like Snap that are like the most speculative pockets of this market right now. Great trade aside, it's why you're seeing that leadership. I don't really think this is about earnings at all. And for those people leaning into this, thinking that us beating much lowered expectations, I would strongly caution you to look around and see what's going on with the macro environment.
Well, and in information,
pivot, do-si-do, two-step, or whatever else, it ain't happening. No dance.
You call it. In an information vacuum like we've had for the past 3 days, where we did not have the luxury of knowing what the earnings would be for big cap technology, a decline in rates certainly was just enough fuel for that rally. But now, Julie, how have things changed, if they have, or is it still just all about rates?
I think everyone is going to look at these earnings on a case-by-case basis. Mostly people are concerned about guidance. I think particularly as we get further on into how is the consumer doing, these tech earnings are important in terms of understanding business confidence, but I think consumer confidence is now the bigger issue as holiday is looming on us. So that's what I think is going to be important. But I agree with Bonwin. Like I don't understand any of these fundamental drivers or why we're so enthusiastic about inflation being softer when it's mostly in housing. That's slow to become unstuck.